Morning, Bob, Trade Genius here, the 19th of January. I'm going to show you a couple charts and show you levels where I think if it gets down to a price to go ahead and take these ETFs, or if it goes up to a price to go ahead and take the ETFs. And these are the index shorts, non-leveraged. And my view is that this is a bear market retracement, and we're not going to all-time highs. But if I'm wrong, we're not going to be getting into the trade anyway. So we have some levels in which will help guide us through that process. So let's get started. You have the ProShares Short Qs ETF, PSQ, and obviously it's showing don't enter yet. And from here, if we bounce to 33.71, this is as of this weekend. This will change every day, and I'll update this every day during the week this week, so you can just follow along. That's on the upside. Now I'm going to show you RWM. This is the Russell. This is the one I think will fail first. Is that level is 44.64. And then here's SH. And SH is at 30.69. Now, one thing I want to show you in all these is that here's a SPY. This is money flow, that it's making a divergence. So money flow is picking up on these short indexes, even though price is coming down. It's very important for you to pay attention to. I also noticed it on PSQ. It's even more pronounced. And I think the NASDAQ is most likely to turn first, just because of the earnings that have been coming out haven't been all that hot. And then you have RWM is not so much. It washed out completely. And this is the one that got hammered the most, so I'm not too surprised. But when things roll over, or we go into any kind of economic contraction or expectation of, this is the one that's going to react the first. This one that likes the higher interest rates the least. And so just keep an eye on that. Now, this program doesn't really help me so much determine where I should take a short. I can do fib lines and all this stuff, but I have something I think is a little bit better, but I need another charting program to show you. And that one is the ProShares on TradingView. And what I like to look at is linear regression lines. And so I have the same vol stops up on here, but if we push down to this blue line here, this is 2 standard deviations looking back 100 days. And this will give us, I think, a good area to enter. So, PSQ gets down in the next week, anywhere in the mid 30s. That'd be a good place to take a position. And if you're more conservative, you could take a half position here, take the other half when this crosses up, or you could take a half position here, and if you think it might go lower, you can average in at 3 standard deviations below. But I doubt it's going to get there. It's very difficult for it to do that. And then so RWM is same thing. I'd be looking anywhere in the mid 40s, 40 area, to take a position if you're if you think this thing will punch down any further, and then that would be a good entry for you. And like I said, if you're more conservative, you can even let it get down into around 39 to take a shot, although I don't think it's going to get there either. And then the last one was SH. And SH here is, that'd be down here in like 28.20 area, and the only way it's going to get here is if we push up the SPY up over 2700, and then this would be a good place to take a position on the long side with SH. and then here obviously you could do half and half or half and half here. So I just wanted to give you some levels. It's nice that you don't have to, you know, guess and just keep taking shots at this, and hopefully you catch the bottom. And because I think the next move will be, I don't think it'll be one of consolidation. I think it'll be whatever direction it goes. I think it's going to run. So my view is that if this following normal procedures, and let me show you ES here. Give me 1 second. Is I had the fibs on this. Is so, and I'll go. So this thing has just been, you know, a rampapalooza here. Is that 2707? I think it really does cap it, and that's 2 standard deviations above the center line on a 4-hour chart. And then on the, if you go back and look back even further using a daily chart, it's already hit past 2 standard deviations and heading into 3 standard deviations. And so we're getting to a point where there's a lot of people that were selling in this area here, and a lot of people will be thankful if they get here. You know, all the talk is we're going to roll into a recession in 2020, and so there's going to be some people that are going to probably ring the bell here. And so that's what we're watching. Now, if it pushes up to here, that's what will probably push the SH down to 2 standard deviations below, and give you a good entry. So anyway, that's that. And if you want to trade with us and get more interaction as to where and when we're taking positions across the board, cryptos, binary options, and the ETFs, stocks, we're running specials now to the 21st, Martin Luther King specials. And you know, he was all about freedom. Let us help you get economic freedom. We put some really good bundles together, some really good pricing, and I think you'll love it. And we follow these rules ourselves, and I think it gives you good entries and good opportunities to take profit, and you don't really care less about the news. Thanks for listening, and go to tradelikeagenius.com if interested. Bye-bye.